Essentially, Ethfinex is one of the largest Bitcoin and cryptocurrency exchanges, and we're launching a new platform called Ethfinex. And so this is specifically now targeting tokens and many of the tokens that are being created from ICOs. And the reason that's going to be a separate product is that we really see these as very distinct products compared to cryptocurrencies themselves. Before I go into what Ethfinex is, I'm going to recap a bit of the history of Ethfinex, which is quite interesting and has really shaped what we are creating now. So crypto exchanges at the moment are essentially centralized, which is obviously strange in an industry all about decentralization. And the reason for that is that a lot of what we do, when it comes down to it, is managing KYC and compliance when interacting with the traditional financial industry and governments. So essentially, we provide a bridge to fiat where users can bring in their money and buy different cryptocurrencies, which is user-friendly. It means we can offer a very high speed and liquid service, but it has several drawbacks in that it doesn't necessarily fit with the model of what blockchain has the potential to achieve. And that's led to centralized risk, which we've seen many, many times since the inception of Bitcoin and cryptocurrency exchanges. Last August, we were hacked and $72 million worth of Bitcoin was stolen. That was shocking in that at the time, Ethfinex was the largest Bitcoin exchange. So it was seen that if anywhere was safe, it should have been Ethfinex, yet this was able to happen. So no centralized exchange was essentially safe. But what happened was that every user's balance was reduced by 36% of the funds that they had on the platform. So that was basically socializing the losses of what was taken. And in return, they were given a debt token, essentially, where for each dollar of value which was removed from their accounts, they had $1 of debt token. So that was a novel concept. The alternative would have been bankruptcy, and that's what was expected. That's what had happened in the past from cryptocurrency hacks. So this debt token was tradable and could be sold on the market on Ethfinex. And the day after it was issued, the market rate was around 20% of its dollar value. So that was therefore, you could equate that to a 20% chance that we would ever repay those funds to our users. And over the next few months, slowly, certain percentages of these tokens were redeemed from operating profits. There was also the opportunity for holders of these tokens to trade them for equity in Ethfinex itself or its parent company. Reaching April of this year, finally, the last of those tokens were redeemed and removed from the market with users given $1 to $1 value of that token. And up to that point, the value of the token had really grown from about 20% up till nearly about 95% at the time of the full redemption. So the really interesting learning point here was that as an alternative to bankruptcy, firstly, this had worked, but secondly, that tokens have a huge potential beyond just pure equity in that by having a tradable token like this, users had an incentive to continue trading on the platform despite the security breach. And we then saw the platform able to return to profitability and therefore able to repay those debt tokens. That was hugely influential in our future thinking around what tokens really are and what their value is beyond just for fundraising. So going forward, Ethfinex was really born in the aftermath of this period. Seeing also the innovation that was happening with Ethereum and projects raising money on Ethereum. And particularly what was really clear was that the true value of these tokens was very strongly related to the communities around the projects. And that was similar in a way to cryptocurrencies, but also had a unique element in that particularly where we really saw value was whenever a network platform was issuing a token, because what you really did was made your platform sticky and really essentially amplified the power of that network. In Ethfinex, that's played a key part, and the trading platform is coupled with a discussion platform where we can almost crowdsource information from community members and experts to really clear out which tokens and which projects are valuable and which are just trying to raise money or don't have a strong idea and concept behind them. The second part of Ethfinex is around decentralized exchange. Again, coming from the lessons from the security breach, a lot more funds were stolen than were in active use on the platform at the time. Adds no value to us and basically creates greater risk in the ecosystem. So in the long run, decentralized exchange and making use of the power of Ethereum and other blockchains has to be the way forward for exchange. And recognizing that, but at the same time recognizing that it's not at a mature point for particularly our more sophisticated users who trade at very high frequencies. It means that we're approaching it from a hybrid model where we will allow decentralized exchanges to plug into our exchange, but will not yet fully be decentralized. The third aspect will be to have our own token, which will never be sold in an ICO, but will be given for free to users of our platform, particularly traders, as a reward for their use of the platform, and then to incentivize them to continue to use it, and in the long run, to decentralize the ownership of the platform. Coming back to really, for us, why ICOs are important and why tokens are important. It's particularly about communities, and there are these three corners which, to us, are completely interrelated in token and ICOs in a way that isn't true on the traditional stock market. Token sales need to be really coupled to the trading, but also to their communities. And so what we hope to achieve here is to be able to incentivize the people who are most knowledgeable to do research and contribute it so that traders and investors can use that information and have it available to them to make the best decisions about which tokens are valuable. And in the long run, we want even decisions about what ends up getting traded to be based on how large a community they have, how well it's rated by the best experts who contribute the best research. And coming now back to hybrid decentralized exchange, this is a more long-term project, but it's clear that we need to find a way to not just sit as other exchanges do above blockchain, but to really integrate it into the service we provide. Therefore, we need to work with other projects in the Ethereum ecosystem. What we hope to do is offer an experimentation zone so that new decentralized exchange projects who are building on Ethereum can trade with our users and our liquidity pool and quickly experiment and improve. So finally, our Nectar token, which is essentially a loyalty point. So the more you trade, the more of these tokens you earn. And you can then use those at the end of each 28-day period, if you wish, to redeem them for a reward from the total fees generated on the platform, or trade them to other members of the incentivization scheme. So this is a way, essentially, of, rather than just raising money, of making sure that the people who own our tokens are our biggest customers. And therefore, those who have the biggest incentive in seeing this become the best platform will necessarily also be the ones who have the biggest stake in it. So this is something which I think is very important for all ICOs and all tokens. It doesn't have value unless the people who own your tokens are also your users, because that's really where this separates from traditional funding methods, in that you augment your initial user base by making sure that those who have invested and who care about your project are also those who will benefit from its success.